This conference will now be recorded.
Hi guys, it's Patrick from the Adamas Principle. First of all, apologies. It's just going to be me solo tonight. Something unavoidable happened with my very special guest, but he will be back another time and I'll give you more details to follow. So it's going to be a bit of a short one tonight, but hopefully you'll still get value. And yeah, so I'll just go through all the topics I put on LinkedIn, and hopefully you'll be well prepped up for the week. It's going to be an interesting week. All eyes on Tuesday, obviously. I just want to do a recap, and I do this with my students usually on a Sunday or a Monday morning. I like to do an Asia wrap. Those of you who've been in my classes, this is pretty much you know what I'm about, and you know this is really important for any spot trader. This is how I was taught by spot traders, and it's just something I really recommend you do. It sets your stall out for the day. It gives you a bias, and just gives you the current market temperature. So I also do this per week as well. So I've written down a very brief, pithy rundown of last week in broad dollar terms, and also, as you know, I'm a risk rally seller, risk on in particular, and so I'm going to talk a little bit about the risk flows and the risk moves as well. What really happened, what the big takeouts for me was midterms, right? What happened to the dollar? It was soft, risk was bid. Trump lost the Dems lost the House. Sorry, excuse me. The Dems won the House. It was as expected. Most of the polls said that. It was a bit odd that things weren't. There was really low vol, and I thought it was a bit odd that it was risk on. So you got all the yen pairs lifted. Swiss kind of doing its own thing, but lifted too. Equities higher, dollar lower. But it is what it is. And that will change when the Fed did the minutes, produced the minutes on Wednesday, kind of all reversed around. And that was an interesting move for me. You can see euro dollar now, we're getting close to that 113 big figure. We closed near it. I think with pre-Asia prices, we are 20s, 1920s. I think I posted it on LinkedIn, so have a look. So the key question I've got is, are we back on the dollar the next leg up? Or is it too early for that? Nothing really changed on the minutes. Powell was, he removed the word accommodative. Can't really pronounce that word too well, but there you go. I'm sure you understand. That's not new. It's been done quite a few times. So he kind of stood pat, but the market, I guess, was positioned probably short dollar going into it. Didn't get what it wanted. I know there was nothing gleaned from me or my contacts, on some big desks to say he was hawkish as such. So that, to me, if something happens when nothing's really changed, that to me is positioning. And students of mine always know about positioning. So a bit of a reprice there on the dollar. And, I just think the dollar was, EM got hurt after the minutes. Dollar rand broke 14 downside and then bounced back above. So that's quite painful for those guys. I just think next week it's all about Tuesday and it's Italian projections on deficit to GDP ratios. The Italians are saying 2.3 or 4. ECB sources are saying 2.9. Big difference. If it cracks 3, That's a problem, big time. So let's just see what happens if they don't match up, they don't marry, and just keep an eye on BTP. And if BTPs get bought, i.e., or I'm looking at BTP yields and Bund spreads. So if they start to widen, expect euro dollar to get sold. So just bear that in mind. You can see my euro dollar chart right now. 113, the big figure, is very, very important for a number of reasons. China's handwriting all over that. That's just my opinion. I can't prove it, but it does coincide with 7 on dollar renminbi. All right, just bear that in mind. Will that break next week? Well, it all depends on Tuesday, and it could break. I'm happy to buy down there first test in next week, but if dollar renminbi breaks, I'm not going to be buying it. I can tell you that much. So you could get a violent dollar leg up if dollar renminbi breaks, because it will be a risk-off move, not just a dollar strength. Because it's not that the renminbi will be devalued; it will be outflows, investment outflows, foreign investment outflows. So that will be carnage on EM, and it will be euro dollar be toast. Just my 2 cents. Let's go. That's just a recap. Let's go to some of the topics. I may not cover them all, save a few for next week. But and sorry, Beat can't be with us because he's watching some guy called Federer play tennis. Never heard of him. Right. So I just, sometimes I don't actually understand the reasons of the moves in the US midterm. So I've got the first topic, the post US midterms risk rally doesn't make any sense. Or am I a fool? I read this before the Fed minutes, obviously, because things reversed. Sometimes it is what it is. There's no rhyme or reason. When I wake up in the morning out of bed, sometimes I'm in a bad mood, sometimes I'm indecisive. That's probably what happened there. Could have been a bit of positioning. Markets are exactly the same as people because they are people. So obviously we reverse things on the Fed. I see, I think that the US macro picture, despite the two CPI misses, is still largely pristine. I somehow see maybe the dollar's coming back next week. So let's just see on CPI. Core's stable, by the way. Hasn't really moved much. Headline, yes, and it's mainly down to oil. Expect headline especially in the US CPI to soften further. I mean, you just have to look at WTI. It's carnage. So I think it's more of a gut instinct. I think the US, the rate path narrative is back. And for me, slam dunk on December 3 priced in on the curve in 2019. It's that fourth hike you've got to be careful for. And we need some proper massive beats on the fundamentals, i.e. the data, especially hard data, to get that. But that will cause the curve for repricing. Some levels on the curve, so I'm going off piece a little bit, but some levels on the curve, we're staying above 3.1 on the 10-year, 3.25 on the 30-year, which is even more important in my eyes. If that just breaks and closes on the monthly, then that is significant. If you don't really know much about the yield curve since I've been trading, 10 years ago or whatever, and certainly the macro guys I talk to, long-term yield curve, i.e. 30 years, all about growth and expectation of CPI. 10 years, more kind of interest rates, and 2 years definitely all about interest rates. So that's how I've been using it, and it may not be completely spot on. But it's served me very well in all the years I've been trading. So yeah, I just feel that maybe the dollar's back. 113 is going to be a formidable level. It is a formidable level. It's a double bottom. It's there's handwriting from China on it, and levels there to be broken. So watch this space. It's all about Tuesday though. So let's see and keep an eye on BTP. All right. So let's go through some of the charts, some monster levels, and we'll give a bit of tech talk. At the close, cable was off. It, another resignation. I think it was Johnson. I mean, if you look there, sorry, my phone's. If you look there, this is the hourly. This 129.80s, the 200 hour, is quite key for me, and we're staying below it. I see it lower, and if you go on the daily, this 130.20 to 130.50 is a rock that has to be sold into, in my eyes. But like with anything Brexit related, things can turn on the dime real quick. So just be careful. So yeah, I mean, 127.75 area is quite a nice level, but obviously it got smashed a week and a half ago. But yeah, I mean, it doesn't look that great, and we're getting to the sharp end of Brexit. But I do not trade cable that often. If you do, just keep it small. Keep it small. This is an interesting chart. Euro sterling. Obviously, you've got both legs and both political aspects as well. Italy with their projections on one side, and you've got Brexit, which is a horror show, to be fair. So having said that, these are technicals at work, you see. This is the 100-hour moving average, 87.20. Not a bad little buy down there, because obviously it respected it there. Not bad there, it's respected it there. So as resistance becomes support. Dollar yen, this is interesting. Let me move this out of the way. Very difficult to trade because you've got risk off, which is my favorite trade, risk off, and it has been for about a month, maybe longer. You've got that and the tug of war with US yields, which are still firm as long as they stay 10-year stays above 3.1. So not ideal. That said, I sold 114, the big figure, last week. Hasn't really done much, but I'm happy to sell up here 114.30 to 70. Not bad. There you go. That's a good friend. Look at that. What does that tell you? It tells you CPI is going to be missed. That's all. Nothing more. That's all you need to know about that. Gold is basically playing its own rules at the moment. Techs are kind of working. Then there's no negative correlation with the dollar at the moment, although see what happens. So this is all right. 12.35. So I don't trade gold, but I always, it's quite a good hedge for CPI. Sometimes when it's risk off, it will go up. Sometimes it's a correlation with dollar, but hasn't been recently. With all of that, Kiwi, this is a risk play as well as a dairy play. Don't tend to touch Kiwi in London hours because it's quite thin. Aussie, there we go. This is what you want to see. You want to see this hugging up here and then off. It's in between these two moving averages. So I'm going to kind of race through Aussie dollar, not bad, but we need to stay below. Bears need to stay below 72.60. The only thing about that is Aussie dollar is a great risk play. Gonna go through. Okay, euro yen, beautiful, absolutely beautiful, and it's staying below that 200 hour. So sell into any rallies if you put it on the daily. The key line in the sand for me on the daily is 130. I'd say 130 at the moment. If you're really feeling adventurous, you want to put your stop above 50, or add at 130.50. But this is all working out really well. Little note on risk plays, it's all driven by equities. That hasn't changed. I don't see it changing for a while. And I see FANGs very vulnerable. The reason I'm interested in equities because it moves effects at the moment. I see FANGs rolling over, and rallies are being sold into, and the Fed's not. Jay Powell said he'd go way past neutral, which is at the moment 2.75. Probably going to hit March. It's going to go past that. It's standing pat on the minutes on Wednesday, back as normal. Nothing's going to change that. I don't see the US macro picture changing anytime soon, unless EM gets a negative feedback loop, and the US economy is fairly secular at the moment. Well, it has been for a long time. So, just going through some other things, rates and equities. I've kind of touched that. EM update. I was going to throw that to my guest because he's an EM guru, but we'll do that another time. And apologies, but these things happen, and I hope what I've said is valuable. Please leave comments because it really helps me as a trader. Tell me I'm wrong, because it makes me better at my job. If you've got any questions on what I've said, let me know. All comments are welcome, even if you don't like what I said or disagree or whatever. I'm in touch with quite a few desks. A lot of good friends of mine are big macro traders. We at Adamus Principle, we do master classes, obviously. It's not an advert for that, but if you want mentorship or want to attend one of my master classes, I can send you all the details, no problem. And that's it for today. Just watch that risk. Tuesday, it's all about Italy. The only thing I'll say on the risk plays, and I popped into Core TV on Friday, is if you're selling risk off moves that perhaps may be led by equities like Euro yen, Aussie yen, Aussie dollar, sometimes dollar yen if it's really risk off, Euro Swiss, dollar Swiss if it's really, really, really risk off. Fine, great, but don't lump in size, because what happens at the end of a cycle, which we're at, vol picks up, and when vol picks up, that means you're going to get some jagged moves, some sharp moves, and you're going to get some tear your face off moves, right? So just be careful. And they're not moves down, they're moves up, because you get squeezes, and the dirty, filthy, quick squeezes, and you could be offside very quickly. So what I do is, if you really, I don't sell breaks lower. If I want to sell at market, if it's risk off, I'll sell smalls and add 20 strength, and just keep that stop in place. Keep it really, really sort of, I would cut your size by half, increase your stop by twice the amount, same amount of risk. Right, that's it. Have a good week, and feel free to ask me any questions. My name is Patrick Reed from the Adamus Principle. Watch that risk and trade safe.